Well, hello, and welcome to our program. My name is Victoria Averbukh. I'm a professor of practice at Cornell Duffield Engineering, and I'm also director of Cornell Financial Engineering. By the virtue of my role, my work sits at the intersection of education and finance, focusing mostly on preparing finance professionals, and not just technically, but also on how to operate in the real world to make decisions. So a lot of what I think about is not just about models, but also how the models are used, how they break, how the professionals develop judgment around them effectively. And I'm really glad that we're able to have this conversation on sort of like this topic exactly together with Evan Reich, who joins me today. Evan and I met at one of the Cornell's annual Future Finance conferences, if I remember correctly. That's the conference where we bring like really exceptional practitioners to exchange ideas, thoughts, and trends in financial industry. And Evan is one of our speakers extraordinaire, as I like to refer to him. So I'm really excited, Evan, that to hear your perspective on the intersection of data, models, and real decisions in the age of AI. You're also going to be one of the instructors in our AI in Finance certificate that we're launching in April 13. And just quickly to let the audience know about this certificate, if you followed me on LinkedIn, you have seen some sneak peeks into the program. The certificate is designed for finance professionals with broad backgrounds, the ones who are interested in figuring out how to navigate AI in their day-to-day without relying on tools, right? The certificate is not about tools. The certificate is going to be about judgment, about data discipline, and really real-world use cases. And with Evan at the helm of today's conversation, we're going to try to take a little deeper look into some of the aspects of what we teach in the certificate. So I'll pass it to you to introduce yourself and, maybe what you do and how you got to become an instructor in the certificate. And also, what the conversation is today going to be about, roughly.
Yeah. So first off, thanks for having me here. Thanks for inviting me to be part of the program. Really excited, as it's a tremendous thing and a tremendous need, I think, for people to really develop that judgment in the world, and that's going to be really exciting. So I'm Evan Reich, Chief Product Officer and Head of AI at BWG Global, which is a research shop that's been around for a long time, but of recent vintage is now starting to think about how to create research and put it out into the world. In a world in which we consume everything via prompt and via AI, and how to think about that process and how to rework that in the world of now and tomorrow to be more dynamic and more engaging and more useful in the way people are now thinking about these things. Prior to this, spent the last 15 or so years running data for a variety of hedge funds, also did a turn at NASDAQ, creating some data products. So I've really seen the evolution of data from the earliest days to where we are now through the whole rise of alternative data and clouds and now AI and all of those exciting developments. So excited to get into it and talk about it, and how to bring good judgment to the process, because that is really the most important thing in all of this. As we trust more and more to AI and prompts, it's more important that we prompt them intelligently and interact with them intelligently and have our real human intuition driving that whole thing, because otherwise it doesn't necessarily end great. And that is very much the outcome we would all like to avoid. So
yes. Well, thank you. So I have a few questions for you, and I'm looking forward to the answer. I also wanted to let the audience know that please, submit your questions, and we'll try to answer them maybe towards the end of our conversation. So data, I think you mentioned them a couple of times just now.
Yes.
Ultimately, AI is a model, right? And
yes.
No model can be good if we don't address the data quality, right?
Absolutely.
The idea of garbage in, garbage out, always being there. But I think in the context of AI, it's become so much more consequential because it's much easier to miss, right?
Yes.
So maybe let's start with, this question. Can you share your thoughts on how you view data? What is data? And maybe you can share an example of a time when a model failed, not because of the algorithm, but because of maybe of some flaw in the underlying data.
Yeah. It's a really interesting question, because when people think about data, and over the years of having been somebody who procures data and things like that, and you say data, people bring different things to that understanding. And the reality is data is all information. Research is data, data is data, numbers is data, text is data. if you think about sort of the last, I don't know, 40 years of everything, all of the reason when people think of traditional data, whether it's databases or tables or these sorts of structures, they all really exist because the computers that we had and the systems we had to work with them couldn't handle text in the sense like we created these things because the computers couldn't do what AI can do now. And when I think about, the next several years, it's very likely that we will move away from why take the work of putting information into a database if all these systems work better on text anyway. We could have just left it that way all along, but unfortunately we didn't have systems that could handle that. So I think, what data is now is all the information, regardless of the form it's in. And I think going forward, we're going to see sort of that becoming more text driven and text based because the systems we have now work better on those. So it'll be interesting to see how we go from a more structured data environment to a more unstructured natural environment, as it were. And as people interact with it, I hear a lot of people talking now about, like, oh, what are the AI tools to work with things in Excel? And it's kind of, if there were young people coming along or people in this program or whatever, why are you necessarily needing to work in Excel? I know that's how we've done it for a long time, but in a real way, you always just wanted to get the answer. And so the question is Excel the good way to get an answer? It can be, but it's not the only way. And certainly as we think more in an AI context, those things become less important. One of the questions you asked about, how models and flaws in the underlying data.
Yeah.
I think it really becomes very interesting to remember that computers are really stupid. If you give them, one number and just say, here's the number, the computer will be like, that number for all time, forever. And that's not a component of judgment the computer has that it understands. So the underlying data, we have to understand the context of that. And we have to explain that as to what it means and how it works. One of the big challenges that AI systems in particular have is they don't understand time series particularly well, because time series is something that is very much a financial services context. And
It's
so
LLMs were trained on text.
Yes. And so, in most of the world, when you say, what's the answer? It's like, here's the thing. It was the thing yesterday. It's probably the thing tomorrow. It'll continue to be the thing. But in financial services, like, here's the thing. It's like, well, but that's 3 weeks old. We know it's not valid anymore, even though there isn't really a new number because of the nature of a time series thing. And that's a really important thing that you need to bring to analysis overall, but in particular in thinking of things in an AI context, because it isn't really built to understand that. And so as we think through all of these, I wouldn't necessarily say the flaws in the underlying data, but misapplication of a piece of underlying data to say, well, I think this describes the problem that I'm trying to solve, but you have to really think through, is this really what we're saying? The problem, it's not a problem, but it's a feature, is that when we look at the world right now and the things we're seeing with oil prices and things like that, there's a lot of analogs back to like the late 70s, early 80s. There's not great data from that period of time. If you get data from the big data providers in the world, they don't go back that far. And so in that sense, where are you going to get information that describes the regime in which we find ourselves sitting in right now? It may be hard or impossible to get your hands on in a lot of cases. And that's an important thing that the human has to bring to the equation to say, how do we think about this? How do we instruct the tools that we're using to understand it to make sure that we're actually applying relevant things? Because if these are in fact different fundamental problems, the computer isn't smart enough to understand that. It doesn't realize that, it's not looking at apples to apples, can cause huge problems.
Right. So if we can kind of like narrow a little bit the focus on data, you mentioned big data concept, right? So,
yes.
And this is what, about 10 years ago, it started to become almost like a household term,
yes.
Right? The big data, everybody was super excited. We're like, now we can, we have capacity to, I don't know, use GPS from Home Depot tracks living warehouses and predict, economic health or, alternative data to use, for the market prediction. But in practice, the more data doesn't really make necessarily a model better or the model outcome better.
It absolutely does not.
Yeah. How do you protect yourself from this, right? When does the models do worse with data?
I think one thing, the easiest way that happens is people think of data as being independent from each other. They think of it as being orthogonal when sometimes it is not. And so in a real way, you have to think about, where is this coming from? And am I giving, this model 12 independent inputs that may say the same thing and those are reinforcing? Or am I telling it the exact same thing 12 times? And that's a problem in the sense, Yoda and Grover sound the same because Frank Oz has his hand talking for both of them. But if you listen to both of them and say, these are independent data points, they aren't, they're coming from the same place. And so that's an important concept to really understand the nature of where your data is coming from. So you understand whether you're giving it reinforcing points or just the same thing over and over and over again, or how that works. The other challenge we have, and you sort of alluded to it, is when we look at like GPS data and all these sorts of things, there is so much information in the world right now. The problem is not that it's not getting enough data. It's that it's getting data that's useful. There is so much information out there. And in particular, where AI is where it is right now, we have to understand the source of the data down to a very granular level. Somewhere, and I don't know who they are, and I hope I never meet them, but somebody could go out and create data using, Claude or AI tools and say, give me a data set, create a fake data set of credit card data going back to the year 1322 with like errors and back testing and everything. And they could show up in the marketplace and say, I have credit card data from the last 700 years. And we would say, credit cards haven't been around that long. But that's only because we know that that's true. Somebody could make something look very convincing and could in fact be complete nonsense. And in order to understand that and work with it and figure out that this isn't the right thing, we have to be querying all of these fundamental attributes of where the data is coming from, how does it apply, what is it saying, what is the noise, what is the signal, how is it distinct from the other data sets you're considering. And so in a very real way, most of the data you can get is likely to make the model worse because it's likely to not have independent, useful information in there. And so you really have to be very clear about what you're attempting to get out of something, how you're using it, the question you're trying to answer. There's a website that's been around for a long time, Spurious Correlations, where it's like, the fact that butter price in the Bhutan tracks, the S&P 500 is a spurious correlation. It's like, it makes the model worse. Why? Well, because it doesn't actually say anything that should be useful here. And so in that way, you have to sort of question, why is this informing this? How am I using this? What's the explainability here? Because these tools, as we use more and more and more advanced tools, they're just going to say this works. So we need to provide that insight as people in looking at all of these sources of information to say, is this actually doing the thing I think it should be doing? Does it make sense? Is it coming from a trusted place? Is it distinct from the other things that I'm doing? And having answered all of those questions, now incorporating it into the model to say, with all that understood, now I'm saying something that's intelligent rather than, the reason why machine learning models in a lot of cases haven't caught on in a lot of facets of finance is because they have the ability to overfit anything. If you have enough data, you can explain something and it can be very useful, but you have to say, should this machine learning model make sense here? And if you're trying to do machine learning on, I don't know, New York Jets football outcomes, there's no reason that should track a machine learning model. That's a bunch of incompetent people trying to win a game they're really bad at. Lifelong But, those sorts of things, you have to apply the tools in the right place and understand why you're doing what you're doing. And AI has a unique ability to apply very powerful tools in absolutely the wrong way and give you very, very meaningful answers that may or may not mean anything at all. And that's where the human has to come in and say, hold on, I understand what's happening here, and this is a good or bad use of what's happening.
Yes, and we're going to get to talk about models. I really want to hear more of your thoughts about models and also, like how to develop instinct and skills in terms of, applying or interpreting or adopting models. I see some questions already coming in. Please keep the questions coming. We're going to answer them at the end of our conversation. But just I want to stay one more moment on the data. So what you are saying is basically sounds like it's fair to say that over time someone should be developing some sort of an instinct for something that's not quite right, which is a lot easier said than done. But
so much,
right? But we can sound like really cool saying that.
Yes.
Whether it's something structural in the data or misalignment or, like the example that you made with credit cards, like how can you have credit card data going back so far when they did not exist? Or, how do you know when the results look, too clean or too predictive to be real, right? So what would be the red flags, especially for somebody who's just like dipping their toes into, like understanding how all these models work? What would be some of the red flags in the data set or model outputs that should trigger that instinct that data is too good to be true?
I think it's important when you think in data, but also particularly around AI usage of data, people always cite hallucinations and they're always like, what is that? And it's important to recognize that hallucinations are when AI is putting in something that wasn't there and it's just trying to give you an answer versus kind of what you're asking here, which is somebody can pass along information that is bad and that whether deliberately so or unintentionally so. And that's not a hallucination. That's a different thing. You're getting actual information from actual people that for whatever reason is not, the way you'd like it to be. And the reality is that, in each of these cases, you really have to have a strong sense of, you have to have some expertise. So it's like, what sort of, if you're looking at, purchase data, there ought to be an element of seasonality to it. Like, does that fit with the things you check historical blips and you say where these blips happened, are we seeing that? If the data is too smooth, if it's too good, if it tracks too well, you kind of have to raise some questions and go, how is it so perfect? How is it this? How is it that? Sometimes you work with people and just like what they're saying doesn't make sense. I remember, some data sets in years past where somebody said like, it describes a very specific thing in a very specific way. And it was like, what you're selling, the fact you're selling this to me is in and of itself problematic. Because if it's so good and it does what you say, and the way to trade this is so straightforward, if it actually was any good, why would you be selling it to me? You should be doing this and trading it on your own and having fabulous riches and inviting us to have a fabulous party at your mansion in Florida. That's not what you're doing. So something here doesn't quite add up. And you have to have a healthy dose of skepticism around everything. And, if somebody's coming and you don't know who they are and they're not coming from a trusted source, where is this coming from? We need more information about how you're collecting this information. You need to reach out to people that are experts in that space to say, this is how oil flow data ought to look. And, what are the features to validate this? And I think as time goes on, the challenge is we're going to have to become a lot more skeptical, not less, because it's going to become a lot easier to fudge over these things to make it look convincing with these better tools. And we're going to have to really delve down into a very high level of expertise to identify where these things aren't good, to have, real trusted chains of authenticity to establish that. And it's really just looking at everything with a critical eye and saying, is this wrong in the places I would expect it to be wrong? If somebody's got a bunch of information that perfectly tracks stock price when it's not based on stock price stuff, if you're looking at oil flow and it tracks stock price, it's like, that shouldn't happen. That's not how oil flows. It doesn't perfectly track the stock price of the oil company. That's ridiculous. And if it's too good, you should wonder those things. And what's the right level of that? That's the intuition part where you have to say, where is this going? What does it mean? Show me the early days of your business when you started generating data and it should look worse. And if it's like, it was perfect from day one, this is a very suspicious thing to say. So it's really just having that skepticism in all places and really a critical eye.
Okay. So we're going to talk a little bit more about the skills, after I want to talk more about the models and then the skills. But what sounds to me you're saying is that you almost need to become an expert in your particular area of finance, right? It's almost like you don't go to a dermatologist if you need new glasses prescription, right? Right. So this seems like this should be the trend and, like becoming the future, like leader or for excellent professional in finance.
Yeah, I also think it's really critical because when we think about these tools that are now available to people, it used to be you had to do a lot of things, and so you needed to do a huge range of them reasonably well to do your job. Since these tools can do many things at least a replacement average level, you shouldn't be spending your time doing those things. You really need to develop real expertise in exactly as you're saying, so that you're bringing value to the equation. If all you can do is be like, I can do everything at an average level, dude, Claude can do everything at an average level. That's what it's there for. If you need to be focusing on what is the thing you do at an exceptional level and using these tools to make sure that it's integratable into your larger process. And that's the key piece of all of it, really. And there's things that you can't necessarily win at. There's functions that, if I think about, like loading files, no one's winning at that. And so, if that only exists at a do it well enough that it's good, then maybe that isn't where people ought to be spending their time going forward. And as a former data engineer, it pains me to say that, but I think the future is, a lot less data engineers for precisely that reason.
Okay. All right. So let's move to the models, right? Let's assume we've understand the data, we got the good clarity, but because AI can consume such vast amounts of data, right? It's incredibly good at finding patterns. And you already mentioned that, right? And humans don't see those patterns, right? Like we need to spend a lot of time and maybe we'll see some of it. So the challenge then becomes that, like, you sort of alluded to that patterns are not really meaningful. Sometimes they look like insight. Sometimes they may be just a coincidence, even though they look like insight. So I think you put it this way at some point that AI is great at finding correlation, So, but how do we distinguish between useful information and just a statistical coincidence?
I think this is actually one of the easier questions because I think really, this is a solved problem reasonably within finance. We've always had, good back testing frameworks and the notion of, in sample versus out of sample testing. And so the simple reality is like, look, that hasn't changed. I think where it has changed a bit is who needs to do that. So that the quants have always needed to do this work and understand that the more fundamentally minded folks have not historically necessarily needed to be doing rigorous back tests, how they think about things. And so that's really where, people need to start applying those tools and understanding the theory behind them to use them deliberately and intelligently so that they're not just saying like, this line fits real good, let's do it. Okay, this line fits real good. Now, do some out of sample checking for, the next 3 weeks or the next month or the next cycle, whatever it is, to gain that confidence that what you're actually saying is in fact a valid, plot rather than just, statistical overfitting and too much correlation. So I think like those problems are well understood. But again, the audience of people that needs to approach it that way is greater than it previously was because they'll be using these tools in ways they have historically not.
Right. So trust by verify model really
100%.
to a much higher level. It's like so much more intense.
Yes.
Finance is an extremely regulated industry, right? And finance people don't want to.
Well, it's a varying degrees. I don't know if we regulate anything in the U.S. anymore, but at some point we will once again. I think Europe still regulates some stuff. So absolutely.
But if we're thinking about this regulated industry, right, and dealing with vast amounts of money, economies rely on a financial industry in many aspects. Explainability, right, becomes very important because we don't want to be right 95% of the time. We want to be right 100% of the time, right? Like all those confidence intervals don't apply to, when you move in billions and millions of dollars. So if we think about it, the explainability is not really the new thing, right? We've done this before, right? Like we've had black boxes in finance. We used value at risk. We used mortgage risk models that failed on us. We've had decades of building quant equity strategies that work until the regime shifts and then they go on, right? So we know, and many of these models are backward looking, right? Like it's financial time series is basically very often backward looking. So there is always understanding that analysts need to build explainability into their workflows, right? And maybe at some point, the human needs to intervene, right? So how do we really build this explainability into the workflow? And so we can truly own the output and at the same time know when to override the model.
It's really where I think like you have to, it's really about pressure testing thoroughly. It's a question of you really need to explore things and interrogate it from a lot of perspectives and be diligent about it because it's a valid thing to say like, look, I did this because the AI output said this, but you want to be clear that you really explored it as thoroughly as possible, having agents that are checking it, having agents and other agents that are checking in on those agents, having more than one model that's actually checking at something. It isn't like, well, I asked OpenAI and it was fine. It's like, great. What did Gemini say? What did Claude say? How do you integrate these things and then bring a human component to keep asking and saying, is this the right framework? Is this what's happening? You want to, if you have a rational basis for something and can explain it in that terms, that's great. Having a statistical basis and just saying the numbers said this is not a satisfying answer unless you've got, enough body around it to say, look, we explored it from 57 angles and we checked it really, really thoroughly. And we checked it going back a long way. And that's why back testing is important to say we've looked in all these regimes and therefore I have a high degree of confidence in this because we've checked everything we can think of. It's really just doing as many unit tests as possible and constantly doing more and saying, have things changed as we go through day to day to day to day to day. Are we continuing to recheck these assumptions lest we get run over by a steamroller because, these things come along and sometimes it's a steamroller we haven't seen before, but we should be checking rigorously and not becoming, casual about it because the more we automate, the less we're sort of directly on top of these decisions. That's when we really have to, at least make sure that none of the conditions have changed. And those tracking elements are incredibly important. And I think that's where a lot of the explainability is just regular checking in to say, has something changed here that I'm not focused on? Because the more inputs we have, And all of this story is one about how there's so much more data, there's so much more information, there's so much more to explain, to at least say, like, I checked into everything as best as I could and seems to be the same, but to really understand what you're checking and why.
So at what point do you think AI will start checking itself? Or we built an AI agent to check the other AI agent, right? The stress testing for, the closed testing model for the, investment plot.
On the quantitative end of finance, that's absolutely happening already. I think there is no doubt that right now, the best practice for anything is to have agents checking your agents and interlocking layer. 1000%. That's already the case, and it's just how far can you go with that, and how diligent can you be in that process? Because what is your exposure to something making a mistake that wasn't checked? And whereas historically somebody could review code X frequency, these things don't sleep, they don't whatever, they can do it a lot more frequently. So what is that frequency to really get that output and be actionable? That's the power of the thing. You can be wrong if you can reply very, very quickly and fix it. And there's nothing wrong with that. I mean, we live in a world, as I'm sure we've noticed, right now the stock market is a random number generator. So being right is very hard, but correcting quickly is certainly possible in a lot of cases. And that's really, a high priority.
Okay. I'm looking at the questions that are coming from the audience, and there are a couple of questions that related to investing. So maybe I'll pivot to these questions first, and then we'll finish with the skills and what kind of like people who are getting into finance or already in finance but looking to I should be focusing on. So there's a question from Fabian. Can you analyze AI market with trends? Can you analyze with AI market trends and movements to identify entry and exit points based on technical analysis?
I mean, as is well documented, it's really a market timing question. Market timing is really hard. That is a very specific, set of things. There's no way to answer that question without understanding the strategy that you're using, the size you're incorporating. There are additional questions that need to be asked here. Can you use AI to help analyze it? Absolutely. Can you figure out the correct entry and exit points for any trade based on technical analysis? I don't know. If it's a $1.2 billion trade, it's probably a little harder than that. If it's, tick to tick, it's a very different question. Certainly the more granular and discrete and closer to tick you get, these are more analyzable, and using the right tools that can work quickly enough, you can definitely do a lot more there because it's more of a yes-no binary decision. The bigger these things become and the larger movements and larger incorporations, it's a much harder question for people or machines. So it's not really a different question in that regard. You can certainly speed up the analysis, but as far as whether you can figure out the right answer for market timing, that is many textbooks have been written on that subject.
Okay, so if that's very difficult, here's another question from D. What types of things should you be using AI for in finance?
Yeah, I think right now the best use case for all of it is really workflow and process. Anything that is reasonably deterministic, anything that is you can make any piece of your process that is deterministic go a lot quicker, a lot more testable, a lot more POC, those kinds of things. Absolutely, that is a fantastic use case for all of it. It's a great way to get smart about things in a hurry to a base level. But it's also about how to bring in other capabilities you may not possess. So, historically, if you wanted to take a huge block of text and do sentiment analysis on it, you needed an NLP engineer and time and data engineering and things like that. Now, anybody can take any block of text, drop it into something and say, give me the sentiment on this in 30 seconds. It may not be as good as a good NLP engineer, but if you want to test out whether that is, a valid approach and whether to explore ideas and then say, well, now I want to enterprise level productionalize it, scale it. Great. Now get the people, but you've understood and explored that concept in a much shorter span of time to go where your brain is going. Using agents to, have 18 things going at once to bring it together so you can do the process of human creation and intelligence while the agents are doing the grunt work in the background. That's the best use of all of these tools, because that is taking one person and making them, hugely more powerful in how they think about, it lets, I was talking to someone earlier today and the exact phraseology, AI lets everyone be the king. It used to be that the king was the only person or the regent could go and get all the information from all the places and have it fed up to them so they can understand it. AI puts you in a position where anyone can collect all that and have all those agents out doing that work for you. Now, what do you do with that? So anytime that that's a useful function of integrating information, that's a terrific use of AI because it puts you in the position to make those intelligent top-down decisions.
Well, so the good news is that we are not living in a world where human oversight is obsolete, at least not yet.
I don't think we're ever going to get there, but I know that that is very much an age thing. I've talked to people, under the age of 27 who are like, we can train AI to do everything. As a matter of both humanism and being old. I would like to believe, and I do believe, that there is insight that people possess that the machines are not able to attain because there's just those moments of connectivity that don't really happen otherwise. We'll see how time plays out, but there is definitely things that people can figure out, especially in talking with other people and really, piecing together things that are not obvious to us, that it's not clear to me that AI is going to get there, but we'll find out. We'll see.
You're right. Actually, there's like a really good question just popped in from audience. Sunanda's asking, what are the ethical challenges applying AI in finance?
Oh, that's a hard one.
A lot.
Really, there's a lot of questions in that because, again, the things that these things are trained on have their own set of biases. They have their own set of implicit. We always have to think about training data and how all these things are created. So when you think about the ethical challenges, they believe a bunch of things because of how they were created. And in a lot of cases, we have to think about, where did that come into play and what does that mean at scale? If everyone's using the same set of agents and the same set of tools in a huge variety of contexts, and those tools shade ever so slightly in one direction, there's an institutional overall system bias in that direction that has a lot of real implications to it. This question is so much, we can spend the next 12 hours doing nothing but discussing this question, but I don't think the ethical challenges to AI in finance are all that distinct from the ethical challenges in applying AI everywhere else, but they are significant, they are massive, and they are in many ways the realm of science fiction that are now becoming our reality, and we all have to deal with those at many, many, many levels, but they are fascinating.
Right, but there are also ethical issues when you're looking at acts and you see in some videos you don't even know whether it's the real or not, right? Or
if you saw the dog run over the finish line during there was a dog that ran over the finish line during the Olympics, and I think anyone who touches AI in any way, shape, or form saw that video and for 2 seconds was like, is this AI generated? And then you saw the NBC thing at the bottom, you're like, I guess this is real. But that's that trusted chain of, if it's NBC, it's probably true. But, it could have been anything, and pretty soon it will be. And that's really the challenge here.
Just like we used to read printed books and we knew the author was trusted because
I only know you're real, Victoria, because we've met in person many times. Otherwise, I'd be like, this is an avatar, and who's to know? So,
Well, I have a Cornell logo behind me, so.
Very much so.
Let's talk a little bit more about, what it means to be an expert, right? And what kind of financial expertise quant finance expertise you need to be bringing. So sounds like what you were saying, and I think you repeated that idea a few times, is that analysts, let's call, people analysts, right? Financial analysts need to really develop some sort of intuition, the market feel. How can I do it if, they basically looking at the code and, moderately clean data day in, day out, right? And especially since the junior kind of routine tasks are being taken over. Like I remember when I started, and I did spend, a few years on Wall Street, I started with like a very, very boring task of analyzing U.S. Treasury futures rolls.
It really speaks to the importance of.
But I learned a lot.
Not to plug the program, but it really speaks to the importance of things like the AI and finance program, because in a very real way, unless you're the kind of person who wants to go out and getting this information isn't easy to get, to go out and say, like, how do I reconstruct, the learnings of the past, whatever, you really are going to have to, whether it's via the certificate program or via, just personal drive, understanding the underpinnings to build in that sense of what is correct, how ought this be structured, how do you build up that, muscle memory expertise. There's a lot of value in the AI tools themselves to be able to say, like, explain to me this and show me samples of this, and to try to get some of that understanding. But it really does become an individual task of needing to go out and gain that knowledge and learn the basics of that. I know I've seen some of the questions come through about, what are the sort of frameworks and the skill sets that people should have? And when I think about AI overall, AI is amazing at implementation. It does the mechanical act of implementation of anything very well, which means that the things that the people have to understand is the theory underlying it so they know what to implement in all cases. So that if you understand, it's an amazing coding engine, but it doesn't know which algorithm to use unless you tell it, use this and here's why, and then it'll implement it better than any person really can implement something. That's true in math, that's true in programming, that's true in data, that's true in finance. Understanding that theory and giving it the theory that is relevant because you are pattern recognizing what's happening here and saying this is the right framework in which to apply. How do you know risk on, risk off, whatever, these kind of frameworks? You make that determination and then say, now go do the implementation of that. You make that choice. There's a scene in the movie Margin Call, which is, many people's favorite, finance movie, but where Jeremy Irons is saying, I get paid to make the one big decision and make that one call. And then it's like everybody else executes that. I think the future version of Margin Call is Jeremy Irons saying, this is what we're doing. And then the AI agent goes and implements everything and no one else is in the movie. So it's like, that is very much the thing that the people need to do to say, this is the choice, this is the theory, this is the rationale.
That's right. That's right. You're right. There are a lot of questions coming about the skills and yes, I am worried also as an educator, as a director of, the semester where students take the classes and become quite finance professionals. I worry about what and how people are learning because also you have to understand the foundations of the tools, but you cannot just learn the tools and do nothing with that, right? And that's how we structure the certificate. We give you, an unintuitive level because we're not expecting any technical expertise from the participants, but you need to start with foundation. You need to understand how we got to this. And then you need to hear how to build a judgment, how to be disciplined about analyzing data, understanding data, how to organize the whole architecture around the, adoption of AI. So I think, unfortunately, it's going to probably be more complicated to become a quant finance professional, be significant quant finance professional 10 years from now, because you need to be extremely intuitive. You need to do better than Claude, whatever the Claude is going to be 5 years from now.
And it's really going to be, it'll be interesting to see where the tools and the frameworks evolve to and what they can do. And then what, again, people need to bring to it. We've all heard a lot of people say, the arts in these sorts of fields are going to become more important and relevant in finance because it's going to be the active thinking differently. I think I saw a quote from Sam Altman, in the last couple of days, talking about the people that'll be successful are skilled tradespeople and neurodiverse people, because it's how do you come at it from a different non-traditional perspective. And that's going to be, the thing that is successful and interesting. And the reality is, if you spent time around, a lot of folks in the hedge fund space, and certainly the quantitative end, there's a lot of neurodiverse people in that space. Not without reason, because it's people that can think differently about the set of problems. And it's how do we challenge ourselves individually to have those thoughts, to feed the models, to prompt them with new ways of thinking so that we chase down new avenues that are interesting. And interestingly, I think, you'll see more people that can engage in those conversations because the tools are lowering the bar for participation, but it's raising the bar for useful contribution, if that makes sense.
Sounds good. There's a lot to do. So let's see, what are the questions? I think some of these about the skills we kind of answered because, so there is a comment from the Earhart, specifically for you, Evan. It's not a question, a comment. You said something that reminded me of my late twin brother, who was a championship bowler. The strikes are easier to achieve than the spares. Picking up a spare takes considerable skill. Also, thank you for a useful discussion and very straightforward and useful answers.
Thank you. That's very kind of you. I couldn't agree more. I think when you get something exactly right, there's an element of luck to that and whatever, but really working through a process to get to the right place, that is the thing that takes a lot of work, and honing that and figuring it out is the hardest part of this. I know I've seen some other questions that have come through around, I guess, other elements of finance around customer privacy and personal data and automated decision-making. These are really important questions. I think that they're likely at the end of the day to be questions that live more in the AI tool level, because it's how that information is being handled and processed, incorporated into those. I think as financial enterprises, certainly in a hedge fund context, no one wants any PII of any kind, and people avoid it like the plague because no good comes of that, and that is generally not something people are looking for. I think the question of how that information gets incorporated into tools and how it gets passed along are very important questions in how we think through all this, and also speaks to, what are the biases inherent in these systems and being careful about that. And that is questions I think as a society overall we're going to have to deal. It is not unique to finance. When I think about those questions for healthcare, they make finance look like nothing. So that is really, they're hugely important questions, and they can't be overstated, but obviously well beyond the scope of what we can address here in 1,000 years, much less in the short time we have remaining. So
that's right. So there's a question from Daniel Green. Sounds like more from a hiring perspective, a management perspective. What distinguishes an AI proficient hire from someone who simply uses tools, which I think, we kind of touched upon, but how do you benchmark those capabilities in a management role?
Yeah, it's an interesting question. It's an interesting question because I think you do see a real discrepancy here in that, there's a lot of academic contexts in which people are like, don't use tools for anything. We just want to see your real knowledge. And, we'll have all the AI checking we can do in the world to find out your real skill. And I think increasingly you see from a hiring perspective of use all the tools, tell us where you're using them. But the idea that we want to know how, if you're amazing but don't know how to use the tools, you're going to be less good than somebody who's slightly less amazing but knows how to make the best use of these. And really the total output is the thing we actually care about. I think, again, it's really going to be about, and we have not kept up with this as an institution, as a society, as anything, really. You can see it in the hiring process where people can't get through the AI screener when they submit their resumes to anything. It's broken and needs to be fixed. But we need to be asking the right questions to understand, and they're very specific questions. I don't know what they are, to be clear. They're very domain specific, but what are the questions around the theory to make sure you understand the right application of how to use these? And then show me the skill of what you can put through, and does this meet the brief? But I think more than anything, you really want people that understand the right theoretical underpinnings of where ought this go, so that you can be most efficient, so that you're making good decisions. And that decision making and how to use these is really what you want people to be focusing on, because that's the judgment. If you're going to take one person and take what was previously a function, where there were 20, 30, 50, 100 people, and have one person with a bunch of agents, that person better be really good with the judgment, really, responsible and ethical about how to run the business, because you're giving them a lot of power and a lot of leverage to do a lot of things, or frankly, to screw up really, really badly. And so you want to make sure that those elements are in place, and then understand what are the right set of checks to place around them to make sure that, they're not unintentionally or intentionally doing something that is dangerous for the business, for, society at large, whatever. Those are the questions we're going to have to really think about. I think those are the things you really want to check for, because people can have amazing skill, not a lot of good judgment or restraint, run off and do a lot of damage without intending to. Those are the kind of things to really be careful about, because they may not, those skill sets don't always go along with each other.
Right. So, but if we were to, back up a little bit and actually think about what specific tools in finance, AI tools in finance,
yep,
you would really look for, maybe somebody who's just starting or trying to, learn this whole stuff before they get to judgment, right? First, you kind of need to start experimenting maybe with something. So what are the best ones for an analyst, or where to start?
I think, when anyone's starting in any, role in any enterprise, you have to remember what you bring to the table is, you're young, you have a lot of energy, you have very few life commitments. And so it's like, how do you, work until your eyes bleed to really, deliver the best possible results? I think the thing that, because there's so much that can be explored with these tools, really what somebody new to the space needs to bring is an immense amount of curiosity, an immense amount of energy, an immense willingness to chase down ideas to a degree that as you get older and more, wired into your ways, and you're like, here's the right path. The thing that people can bring to it is like, look, I'm going to explore all the options and find new things, and really be very diligent in the implementation and the checking and the review, and really stay on top of the technology. This is what people can bring, but more than anything, it's the enthusiasm and energy for the thing. And that's where you really do have to go out and really, whereas before it was like, I'm interested in finance, or I'm interested in the bond market. It's like, now you have to be like, because you can be so skilled and you can learn so much so quickly, it's not the bond market. It's this little tiny facet of the bond market in this geography and this thing. And there's no reason you can't very quickly get up to speed and really understand that fully. So then the questions you're asking, even as a very, young person to the role or a new person to the role, have a much higher level of technical skill. You may not have any of that DNA of like, I understand, what's right and wrong and how this works, but your technical skills ought to be off the chart because you can absolutely get up to that level very, very, very quickly as a young person with time to learn those things and deploy that. And there's really no excuse for not having that in all cases.
It's almost like the younger people have it's so much easier for them to learn a new language.
Yeah.
And, like for middle-aged people, it's the same thing, right? So, and especially given how much advanced and it's like really AI revolution that we're witnessing now, and people who are, more senior, they just don't have it in them to really grasp it. I think young people should really focus on putting themselves out there.
But it's also important to recognize how balkanized all of this is, and that like if you spend your time, I spend a lot of my time in the data space and the AI space, and so everybody's like, oh, we all know all these things, we all know MCPs, we all know all this stuff, and then you go 10 feet outside that space, and it's like, wait, some of these people don't know what Claude is, they don't really understand how these tools work, and it's like, so the best thing you can do, I think, is really to not let yourself be pigeonholed into like a little tiny group of people where it's like, we all know the same 12 things. You need to actively be pushing outside that to say, what are the learnings that others have that are useful that I can bring into this before you end up, in the little space where you live with the same 20. It is a feature of the financial services business that, someone will trade the most exotic future that only 8 people in the world trade. And they are so used to living in that little space. They will talk to people outside that space and say, of course, these 87 words that we only know in the little space, because they think everybody thinks that way all the time. And so to the degree that you don't let yourself do that and you let yourself understand all the concepts coming in from a variety of places, you can integrate that and be bigger and use the tools better to incorporate these ideas from outside that one specific domain. Because again, what AI lets you do is test theories very, very, very quickly in ways to say, like, does this make sense? Is there something here? And then if it's good, we can productionalize it, we can enterprise it, we can do whatever it is. That is the amazing power of these tools, to let one person effectively bring 57 capabilities together and explore something where previously they would have had to get a bunch of other people and time and all these things. To the degree you can do that over and over iteratively to bring in all these concepts, there's amazing work that can be done and a lot of things that people haven't even explored yet.
We have time for maybe one more question. I think we pretty much answered all the questions that were coming in, but otherwise, I think, thank you, Evan, for this amazing conversation. I agree with your hearts. It was very insightful and very straightforward. I appreciate that.
Thank you for having me.
Do we have any more questions? Let's give it a second to see if there are any more questions, and then we'll close.
And incredibly excited to be, part of the program, and excited to see the people that are looking to do this, because in a very real way, I think, it's the easy thing is for people to be like, I'm just going to go use the tools, but that's, giving, people a sharp object with not a lot of knowledge, and they're going to run around and hopefully not hurt themselves. But learning how to use it well and really think through the process, that's the value. And I'm excited about this program for that reason.
Thank you. I'm excited about it too. I mean, it's easy to get on YouTube and learn how to use a tool, or like start a Claude or ChatGPT capabilities. But I really think putting this in the perspective and understand what it means to adopt an AI model and run an AI model, it's very complicated. We don't have the guardrails in place yet.
And to be clear, none of us know. No one has figured this out yet. This is entirely anything could happen. So it really is the ability to pivot and be dynamic and not overcommit to something and change your assumptions is, I think, going to be the core value of all of this going forward. So.
And I think it's also good for all of us to be surrounded by people who become real true experts, right? And
Absolutely.
have deep understanding, so that because we don't want. We want to have as few finance bubbles as possible. Not going to venture and say we're never going to have another one, but I'm sure we will. But we'd like to have as few as possible and as small as possible. Thank you, Evan, very much. Looking forward to AI and finance certificate with you that starts in April, and I'm sure we'll keep in touch before that. Thank you, everybody,
for joining.
It was great. Thank you. Take care.